Let's start
Hey,
with
Kelly.
Amazon, especially after hearing some weakness in Microsoft and Google Cloud. We've got obviously questions about AWS revenue growth. On the retail side, how did holiday sales do? What's your take here?
Well, we know holiday sales were great. I think the question around AWS is what's going to drive the stock based upon Microsoft, based upon Google. I think there's a little bit of an unclear dynamic here, but anywhere 19 to 20% AWS growth. Again, we're back into growth here, and I think this would be continuing a trend that really did start to get a whole lot better. So I think that is key. We know workloads are increasing. We know demand is increasing. So I just think it's getting back to both what that number is, but then the margin. Overall, I'd say for both e-commerce and overall for AWS, I mean, I think the margin dynamics are a pretty good story. Operating income seems to be moving higher. The stock overall, despite really outperforming most of the Mag 7 over the last 6 months. I mean, it's up 50% over 6 months. It's outperformed the NASDAQ by about 15% over the last year. But it's not expensive relative to itself. It's about 26 times forward. It's double that on a 5-year historical. So I really like Amazon relative even to this peer group right now. I think there's a lot of balance between the e-commerce, which we all know those holiday sales were great. We know where they are on those secular trends in e-commerce, and I think they can improve the profitability there, too.
Kind of echoing what Larry Adams said, where he thinks as well. He said valuations for the Mag 7 outside of Tesla are at their lowest since 2018. So interesting after the performance we've seen. Let's talk about Affirm then, because Susquehanna recently downgraded the name, and they're a little focused on how much user take-up there was during the holiday season. Buy now, pay later obviously is always a little bit of like a political football as well. Do you like the stock?
I don't like the stock, but it's not that they're not executing. I think right now, buy now, pay later trends are fantastic. And I think between e-commerce strength, consumption strength, those are all things that are helping they and other players in the field. Frank, I'd rather be in MasterCard and Visa on that front. But when you look at buy now, pay later, I think it's certainly a trend that continues. When I look at Affirm, GMV is growing. They've just raised a fair amount of money, $5 billion or so recently, to have more access to capital. I think the margin profile is fine. I just feel like this is a credit story that when the music stops, it's not going to be pretty. I don't know when the music's going to stop. I just wouldn't chase it. It's not cheap. It's 5.5 times revenue. But they're taking market share in a space that's growing. For the bulls, that's the story.
I think you're right, too. A lot of people would rather just sit in Visa and MasterCard and kind of see how it plays out. What about Expedia? That was our mystery chart today. Good job. I think it was Oyster Capital who got it first. Piper Sandler analysts are watching how much Vrbo has grown in the past few months and actually whether the California wildfires hurt some demand and trends there. Expedia is up 46% over the past 6 months.
Huge run. I think relative, again, to peers, though, if you're relative to bookings, it's probably 7 turns cheap. Relative to Airbnb, it's probably half that PE multiple. The trends in U.S. hotel and for people that are really digging into the sector. I mean, the revenue per available room numbers in the U.S. have been fantastic. So they're going to support Expedia. I think this is really a story where the trends are decent. Stock's had a huge run. I think you're probably buying weakness. I don't think you're chasing this one, but right now those U.S. trends are strong.